This video we are preparing for your paper 2 examination for accounting. So we are going to look at the paper 2 scope in full, starting with our topics. We want to know what are the topics that are going to be relevant for your paper 2 paper, and then we are going to look at some 2024 questions that we are going to get from the preparatory examination paper for the Gauteng province to help us see the topics as they are asked by the examiner. So when you look at your paper 2 scope, you see that we have 4 topics that are going to be your concern for your paper 2. You're going to have reconciliations, number 1, and then you're going to have accounting, cost accounting, which is also known as manufacturing. And then we are going to look at stock evaluation or stock valuations and VAT. Usually they go hand in hand with each other. And then finally, the last topic we are going to look into is the topic of budgets. Now, what we are going to do before we get into every single one of these questions is we are going to expand into, when we are talking about reconciliation, what can you expect under the topic of reconciliations, what can you expect under the topic of cost accounting, and what to study and focus on when you're looking at your stock valuation and VAT, and as well as the calculations that are going to be important for you to master when it comes to budgeting. So all of that, we are going to go through it as we go through the question paper of the preparatory examination for 2024. Remember guys, it's a preparatory paper, so it makes sense that in the preparatory paper they are preparing you for your final examinations. Hence, I like to use the preparatory question papers to help us see the questions that are very relevant and time relevant when it comes to the year, because we are going to be looking at the questions that are specifically for 2024. In case there's any changes, any relevant topics, and it's not going to be too far from your scope of 2024 since it was in the preparatory for 2024, if that's making sense. So when we go to the first topic, being reconciliations, under reconciliation you are going to have 3 types of reconciliations. The first being the bank reconciliation, which is very popular, and then you're also going to have a debtors reconciliation and the creditors reconciliation. So with a bank reconciliation, we are going to have a question where you are going to see how we do a bank reconciliation if you are unfamiliar with it, but you know that what's most important with a bank reconciliation, you need to be able to correct your CPJ and your CRJ, and then be able to correct your bank account balance, and then in the end, that's when you move on to preparing the bank reconciliation statement. With a debtors reconciliation and a creditors reconciliation, it's more of you understanding how debtors and creditors work. There's not necessarily a statement, but there are calculations where they're asking you to correct some amounts and so forth. So let's look at a bank reconciliation to start with. In question 1 of our question paper, from the 2024 preparatory paper, we are looking at a bank reconciliation. It says the information relates to Fikile Traders for August 2024. The business receives its official bank statement on the 25th day of each month. In 1.1.1, they want you to calculate the following on the 31st of August 2024. It's very important that you keep in mind that the month that we are dealing with is the month of August, because bank reconciliation are prepared on a month-to-month basis. The first thing they want us to do is to correct the totals for cash journals. So we are going to look at our answer book. In our answer book, you will see that what we are correcting are our cash journals, are the cash receipt journals and the cash payment journal. They have already entered for us the provisional amount or the provisional balances, and what we have to do is add to them and subtract to them. So we are going to look at our information. When we go to information A, usually in information A you will see that they will always give you the bank reconciliation statement of the previous month. So since we are in in August, that means this is the bank reconciliation for July. And then in information C, they say that when comparing the July reconciliation statement to the August bank statement, the following was noted, meaning that they looked, these are some notes pertaining to that bank reconciliation for July that we were just looking at. The first one says the outstanding EFT 672 and the correction of the error were correctly reflected in the August 2024 bank statement. The second bullet says the outstanding deposit of 23 July 2024 appeared on the August 2024 bank statement, but the amount reflected correctly as 11,500. It was decided to write off the balance because the accountant revealed that she had been marked on the way to the bank. Our outstanding deposit was 21,500 and we received the 11.5, so the difference is what we are going to write off. And since this was an income, it means we are going to write it off in the opposite journal, which is the cash payment journal. So in the cash payment journal, we are going to record the 10,000 to show that we are cancelling it's no longer an income. And then we are going to go to information D. Information D is relevant because it says the following items on the August 2024 bank statement did not appear in the August cash journals. So we know that all of these amounts are not included in our cash journals, so we need to include them. The first one is an EFT payment from Zibe for 1.8 in settlement of his account of 2,000 rands. We received 1.8, so we are going to record 1.8 in our cash receipts journal. Don't record the 2,000 because we didn't receive 2,000, we received 1.8. The second one is the monthly debit order in favor of Assurance Ltd for the insurance premium of 850. We know that we are paying a premium or we are paying an insurance. This is a payment, so it's going to go straight into our cash payment journal. So there is nothing that we need to stress about here. It's simple and straightforward. So you're going to go to your answer sheet and in your cash payment journal record the 850 as the payment to the insurance company. And then the third one says a deposit of 11,000 appeared in the current account of Figile Traders on 24 August 2024. The deposit has been identified as an error made by the bank. The bank has agreed to correct the error on the September bank statement. This amount is not a mistake in our cash journals, so we are not going to correct it in our cash journals. So we are going to leave it as is, but where we are going to correct it is in our bank reconciliation statement. So in the bank reconciliation statement, we are going to enter it, but in our cash journals, it's an absolute no-no. We are not entering it. So we are going to move on to the next bullet, which is about bank charges. We see that we have bank charges of 1,770. So bank charges, we know they are a payment that I'm making to the bank, or the bank is deducting money from me. So that's going to be cash payment journal. Same thing if it was called service fees. Sometimes they call it service fees. A fee is a fee, you pay it, so make sure that you put it in CPJ. And then the last bullet point there is about interest on a credit balance of 2,160. A credit balance on the bank statement means that it's my money or the company's money, meaning it's a good thing. So it becomes an income because it means that we are being given interest for having a positive bank balance. So that 2,160 is going to go into my cash receipts journal. And then we are going to skip off to information C. You see that it says items in the journals but not in the bank statement. So that means those amounts are already in the journals. So information E does not go anywhere near my cash journals. I'm moving to information F. It says a debit card entry on 30 August 2024 to withdraw cash for wages of 32,000 was recorded on the statement. The bookkeeper was not informed. So this means we were paying wages, and the bookkeeper, if the bookkeeper was not informed, it means this amount was never entered, because how would he enter an amount that he doesn't know of? So it's an amount of us paying wages of 32,000. It goes straight into our cash payment journal. And then in information G, it says the credit card sales appeared correctly on the bank statement as 12,300, but in the CRJ it appeared as 21,300. Whenever you have a mistake of errors in the amount, where the amount is an error, what you have to do is calculate the difference first. So 21,300 minus 12,300 gives me 9,000, and then that 9,000 is going to be corrected in the cash payment, because this error, remember, was made in the CRJ. So if there's an error in the CRJ, you correct it in the CPJ. And then lastly, the last thing you're going to do is calculate your totals, your new totals for CPJ and CRJ. For CRJ, we have 162,060. For CPJ, we have 148 and 410. And that is your cash journals corrected. The second thing they wanted you to do in 1.1 was to calculate the bank account balance in the general ledger for the business. To do that, we have a formula. The formula is opening balance plus the new CRJ total that we just calculated minus the new CPJ total that we have just calculated as well, and that's going to give you your bank account balance. So let's go find our opening balance. Where do you find it? You find it in information A. It's going to be the last amount on the bank reconciliation of the previous month, because it would have been the closing of the previous month would be the opening for this month. That's 17,470. So we are going to start with it. It says it's on the credit, so it's going to be a minus 17,470. We are going to plus our 162.60 because that was our new total for CRJ, and then minus the new total for CPJ, which was 148 and 410, and it gives us minus 3,820 on the credit. The minus always means it goes on the credit. In 1.1.2, they are now asking you to prepare the bank reconciliation statement on 31st August 2024. So keep in mind that bank account balance that we just calculated of 3,820, because it's going to be relevant here. And as we are going into our bank reconciliation, the first thing we must do is look thoroughly into our framework. You need to know your framework. This part on the answer book, you can see that it came empty. I'm the one who filled in those line items. You need to be able to as well know what comes first, what comes second, and how do you record it. At first, we have a balance as per bank statement. This is usually the balancing figure, so it will depend on whichever side it goes. And then you have outstanding deposits, which always go on the credit. Outstanding EFT is gonna always go on the debit, and then amount incorrectly credited, that means you're going to correct it on the debit, and then balance as per bank account at last. So when we look at our information H, we're trying to now find information to substitute into our bank reconciliation. We see that a balance as per bank statement is a question mark. So that's going to be as our balancing figure. Like I said, usually they make it a balancing figure because they haven't given it to you. So we're just going to leave it for now and move on to those items we said there in our journals but not in our bank statement. That means they go to the bank reconciliation. We have an EFT 633 of 14,600 and a cash deposit of 24,620. We said cash deposit are credited, EFTs are debited. So we are going to go to our answer sheet and make sure we credit deposit and debit EFT. So you see our outstanding deposit of 24,620 is on the credit side, and our 14,600, which is the EFT, is on the debit side. Note it somewhere if you didn't already know this. Outstanding deposits credit, outstanding EFTs debit. Always, it doesn't change. And then we have that amount of 11,000 in bullet number 3 there in information D, that they said they recorded it on the bank statement. This was an error by the bank. They are going to correct it in the bank statement of September, meaning the following month. So since they credited it and the error was that they credited it, our correction is going to be on the debit side. So we are going to enter the 11,000 on the debit side, and then next we are going to put in that bank account balance that we just calculated, remember, of 3,820, and because it was a negative, it goes on the credit, hence I wrote that credit next to it. And then lastly, what you're going to do is balance your amounts at the bottom with the amount that is with the column that is bigger. My biggest column is on the credit side, so the credit side gives me 28,440, and because it has to be the same, I'm going to write it on the debit side as well. And because the debit side is not quite that amount, that means what's missing is my balance as per bank statement. So I'm going to take my 28,440 minus 11,000 minus 14,600. It gives me that amount at the top. When you look at a debtors reconciliation, on the other hand, it's different from a bank reconciliation in that it doesn't have a statement. You just here correct amounts individually. So let's look at 1.2.1. It says indicate the corrections that must be made to a debtors control account in the general ledger by showing the amounts with a plus for increase, a minus for decrease, or write no change if there's no effect. So you're going to be given a list of errors and you just have to tell them, how do we go about correcting this error? This is what we call a debtors reconciliation. Similarly for creditors reconciliation. So there we have a total of debtors allowance journal that was overcast by 1.3. How do we correct this? We correct this by adding the 1.3. Why? Because the debtors allowance journal is a journal where it records returns. So if there's a return that we said this was a return and those returns are overcast, it means we have minused way too much than we were supposed to, so we need to add back. Roman figure 2 says an interest of 250 must be charged on the overdue amount of M. Smith. So that means we are going to add the interest, because that means M. Smith now owes us an extra 250 for not paying their account on time. And then when it comes to Roman figure 3, it says an amount of 3.2 received from Tinaidu was correctly recorded in the cash receipts journal but posted as 2.3 in the account of Tinaidu. Now, this is an error on specifically the account of Tinaidu. Our books are correct. So that means since it's correct in our books, we are going to have a no change. Hence, you see it there as no change. And then in Roman figure 4, we have a merchandise bought by A. Kunene for 800 posted to the wrong side of his account in the debtors ledger. Again, the error is in his account. Our books are okay, and if our books are okay, it's always no change. So you're going to write it as no change. In the debtors list, that's when you're going to deal with it. But in our book, because here we are correcting specifically our book. And then the last one is no entry was made for a credit note issued to X Zulu for 540. So that means if no entry was made, it means even in our books it wasn't made. It wasn't made for his account, it also wasn't made in our books. So that means we need to make sure that we make that entry. And since it's a credit note, it means he was returning something, and that means he no longer owes us that 540, so we need to subtract it. We are subtracting it not because he paid it, but because he's no longer owing it to us because he returned the goods. You can't pay for goods that you did not take anymore. And then in 1.2.2, they said prepare the correct debtors list on 31st July 2024, showing workings with the relevant amounts in brackets to earn part marks. Now, this is the only some sort of statement that we could say we have in debtors control. But even it, you are just looking at the debtors list that they gave you, and you are just going to adjust it with that information we were just dealing with in Roman figure 1 to Roman figure 5. So we are going to look at information relating. So for example, Let's start with Ekunene. Ekunene has a credit balance of 1,000. When you go straight to Roman figure 4, it talks about Ekunene specifically, and it says he bought merchandise of 800 and was posted on the wrong side of his account on the debtors ledger. Now, what you do when something has been posted on the wrong side, you have to add it twice, meaning if it's 800, it's now going to be 1,600. So you're going to say 1 minus 1,000 plus 1,600. When you punch it in your calculator, it's going to give you 600. What is the reason? The first 800 is going to correct the error. The second 800 is going to now be the recording that you were supposed to do in the first place. And then when we get to T9 we see she has a debit balance of 6.2, and Roman figure 3 says an amount of 3.2 received from T9 was correctly recorded in the cash receipt journal but posted incorrectly as 2.3. Now with this one, again, error of amount, you first have to find the difference, and then that you're going to now adjust this amount with the difference. So what is the difference? You're going to say 3.2 minus 2.3 gives me 900. Now in his account, you're going to start with his debit amount of 6.2, then minus the 900, and it gives you 5.3. Minusing it because this was the amount that was supposed to decrease her debt or his debt, but instead we decreased his debt with an amount that is short. So that means we need to decrease it with a further 900 in order to decrease it in full. Remember, when you pay, meaning in the cash receipt journal, you're giving me money, it means you are decreasing your debt. And then for X Zulu, who has a debit balance of 2.3, we have information 5. It says an entry was made for a credit note to X Zulu of 540. Credit note, remember we said it means he was returning goods, so that means it reduces his debt again with 540. So 2.3 minus 540 gives me 1,760. It's decreasing his debt because he returned the goods. It means he no longer owes us for them. And then the last person is M. Smith, who owes us 7.6, and in Roman figure 2 it says interest of 250 must be charged to the overdue account of M. Smith. So we need to charge him an extra 250 because he's owing us for a late payment. So we're just going to take their 7.6 and add to it 250, and it gives us 7,850. Then the last thing that you are going to be required to do is just in your answer book, you will see you will be given a space where you can total everything that you have just calculated for your new debtors list and total it at the end, and that would be the end of your debtors list. Because this video is quite lengthy, I have decided to post it in parts in order to avoid it being delayed, because if I wait to record the whole video, it might be way too late when I finally do post it. So I have posted the first part for you. It was reconciliation. The next one is going to be on cost accounting, which is also known as manufacturing. So make sure that you turn your post notifications bell on and be in the lookout for the next one that's coming very soon. Have YouTube recommend you more of my videos, be sure to click the like button and subscribe to the channel, and if you have any questions, leave them in the comment section below.